Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So last week, speaking shortly, was really nightmare for a trading process because we've got really hard whipsaw action, and not just because of and mostly not because of the performance of the market itself, but because different external factors have intruded in the natural price swings, bringing some unnecessary volatility in the performance of the market. So although the overall downside context was remaining valid, big spikes and breaking of the intraday patterns and important levels brought unnecessary, some kind of uncertainty in the price behavior and lots of really false signals concerning the possible trending of the direction or something of the sort. So as a result, it was really very difficult to trade euro on last week. Today we have taken in-depth look on recent data that we've got, particularly speaking non-farm payrolls report and United States Treasury statement concerning the planning borrowings that come in the first and second quarter of 2024. And we think that there's two major factors that could shape the market, could make the shape of the market in the nearest few months. With the high degree of the probability, we're suggesting that recent payrolls data are really big cheat of the markets. We suggest that it's big fraud, and they have as a political as economical big targets. So all the stuff we have described and explained why we think that this data can't be really correct and can't present the current condition in the job market in the United States. So if such kind of big stakes right now stand on the table, they're doing with some definite targets. And we suggest that as United States Treasury and as the Federal Reserve will keep going to these targets. So that makes us think that despite all volatility, and that may be a current performance on the dollar and euro currency here in particular, are not really fair, so supposedly it should be another direction. But since they are driving artificially, we suggest the United States these authorities, as the Fed, as the United States Treasury, hardly let the United States dollar to fall drastically in the nearest few months. So they will keep United States dollar on the course to the upside. If necessary, it will be done artificially with the manipulating of the statistics, providing some really surprising data and other stuff. So that's actually what we see currently in the euro currency. From that standpoint, I think that we need to keep an eye on a different picture. So all the stuff we have discussed today in details and explain on the many examples, charts, why this is really incorrect. Here, guys, I just tell you the only one thing that I have made in today's report. Let's suppose that I am not an economist. I understand nothing in economies and statistics, rates, and so on. And I would ask only one question. With the keeping rate at 5.5% for a year or maybe longer, we have outstanding performance of the economy. Gross domestic product around the 5%, unemployment on the 3%, payrolls on the 300,000 monthly, because on the daily we also had around 300,000. And I would ask you, does it mean that the higher rate is, the better economy performs? So that's the conclusion that we could make currently on the data that we are getting. And it's absolutely totally absurd. It means that something is not correct in recent data. And we have explained what particular incorrect and what does it mean and what conclusions we could make for the performance on the euro currency based on the results of our investigation of recent data and other information that we've got right now. So as a result of this, as I said, we suggest that probably United States authorities will try to keep dollar on the surface, don't let them to show really significant drop. So, and based on this, we should consider some different pictures, as I said, particularly speaking, that might be the hand shoulders on the daily chart of the euro currency. So nearest target is considering around 107.35, 107.40, slightly below this market. We've got two grabbers recently, performance recently on the payrolls as well, which sharp reversal here, suggesting that market could keep dropping lower. So on the dollar index, we have the same performance, but surprisingly, it's absolutely different grabbers in the opposite direction. But take a look that one grabber is erasing another one. So I wouldn't rely too much on these grabbers because simultaneously we've got bullish reversal session. And I suggest that this grabber is more some kind of the byproduct of the previous, just occasional result of the recent volatility on the market. Although after this type of action for the 2 weeks, I wouldn't surprise if we'll get sharp drop on the next day by some reasons. Unfortunately, we can't predict this, and we could rely only on the picture that we have right at this moment. So based on all this stuff, and if we are correct in our suggestion of ongoing events, with once again OP here around 104.40, as well as on the euro currency that stands slightly above the market, on the euro currency it stands slightly below the market, right there. We're keep watching for this target. So on the 12 time frame chart, market surprisingly by some really miracle was able to stay inside of this range. So our potential bullish pattern that we were intending to watching for now is totally erased, so it has not even been formed, and we have sharp drop inside of the channel. Once again, we're returning back to the starting point with the getting bearish context across the market. We have sharp sell-off here, but market once again stands near the low of the channel. It means that next week we're starting our journey with waiting for some pullback to some levels where we could consider taking the short position and following with the tendency to the 107.40 target. By the way, the OP stands very close to the level of the neckline, so it might be particularly the target that's finalized forming of the head pattern right here. On the hourly chart, I do not see anything interesting, so you can see what has happened. Actually, these two levels that we intend to keep an eye on. So 108.20, 108.45, and see what will happen around them. So whether this will be a nice chance for taking the short position once again on the euro currency. So not occasionally we said on Friday that we prefer to wait when the payrolls will be released and then make the decision on the next step. So now, with the fundamental background that we have, with this performance that we have here on the dollar index, we have bearish context, and that's why let's see whether the market will be able to hold it, and we'll consider these levels for potential position taking.